Joining us now from BNY Mellon is Head of ETF Solutions, Matt Camuso. Matt, for starters, can you tell me about BNY Mellon's footprint in the ETF industry?
Of course. So this year, we're actually celebrating our 240th year anniversary since Alexander Hamilton founded our company. And why I actually start there is because for a company to make it that long in any industry, you need to have a history that's rooted in evolution. And I think our ETF footprint is actually a really good example of that evolution. I think we all know that ETFs have been a growth trend in our industry the last 30 plus years. And actually, if we look at our company today, we have business lines that interact with every single part of the ETF ecosystem. So from asset servicing, we're actually one of the largest ETF asset servicing firms globally. From sub-advisory, we're the largest US sub-advisor of ETFs. From trading and liquidity, we operate as an authorized participant and as an ETF market maker. And the most recent innovation actually is coming from investment management when we entered the ETF space as an issuer in 2020. So what we like to say is this gives us a 360-degree lens of the industry, which not only makes us competitive, but I think gives us a unique perspective and allows us to be a really comprehensive resource for our clients when it comes to ETFs.
And of course, active ETFs are rapidly growing. Can you share your perspective on this and what you think is important for investors to consider?
Of course. Yeah. I mean, it's been fascinating to watch really the past 4 years just to see the growth in active ETFs, 4x roughly in 4 years. And of course, with that much flow to a certain area comes product. And last year, we actually saw a record in terms of active ETFs launched. So almost 400 products launched in a single year. So a lot of client conversations we're having now is making sure that their due diligence process, especially if those clients are only used to selecting active mutual funds for their strategies, they revamp their due diligence process to make sure it's fit for ETFs. So a lot of education around ETF nuances, because I think a lot of product is great for selection, but sometimes picking the right strategy becomes difficult. So I think a lot of due diligence focus and really circling around education for those kind of ETF nuances.
Finally, Matt, you mentioned due diligence. What are the key questions investors should have in mind?
Yeah, so we're really going to focus on three. So it's understanding how the strategy came to market, understanding the tax efficiency of that ETF, and understanding the liquidity. For how the strategy came to market, outside of the plain vanilla, it's a new strategy coming to market through the active ETF. We really see three distinct ways active ETFs are coming to market. It's either a clone, a cousin, or a conversion. A clone being it's the exact same strategy that's in a mutual fund that's in an ETF. Fairly straightforward, but I think it's important to work with your ETF issuers to understand their comfort level of replicating that exact strategy now in an ETF wrapper. And if they're comfortable, you can kind of map that older track record from that clone product to now the ETF. For cousins, we'll call these related strategies, but not the same. So working with the issuer to understand what's different about the ETF strategy and why they made it that different way. So you can kind of draw your own conclusions as to pros and cons. And finally, conversions, again, fairly straightforward, but some important questions when you see a mutual fund converting over to an ETF. First, with the issuer, why did they do it? And second, actually brings us to our next point. Were there any embedded gains that actually moved from that mutual fund to ETF? Because that's going to affect your tax efficiency, maybe in the shorter term for the ETF vehicle. For tax efficiency, we kind of rank it in order of magnitude. So you either have fully in kind, which we'll say is the most tax efficient way. So just ask your issuer, what's your create redeem process? Fully in kind is your most tax efficient. A mix of in kind and cash is kind of your second tax efficiency, and all cash is really your third. But just having that understanding, especially if you're going to the active ETF for a tax efficiency reason. And last, and probably our most popular topic is liquidity. Working with the issuer and their capital markets desk to understand what's their comfort level in terms of liquidity for the strategy. Because just looking at the average daily volume of the ETF doesn't do the true liquidity justice. As we say, the average daily volume of the ETF is what has been traded, not what can be traded. So working with the issuer's capital markets desk to truly understand what the underlying liquidity is of the strategy so you can make sure it fits your needs.
Well, Matt, thank you so much for joining us. And thank you to everyone out there watching. Once again, that was Matt Camuso with BNY Mellon. I'm Jenna Dagenhart with Asset TV.